Alright guys, this is Royals Capital one more time. I'm making a quick review on EU, so let's dive right into the charts. So I'm currently on the monthly time frame, and I actually want to note one thing. You see the concept of liquidity. EU, most forex peers actually respect it very, very, very much. Let me show you guys something. Look at what we're currently in a downtrend, right? In a long-term downtrend on EU, and after this impulsive move, price retraces up to equilibrium, consolidates, and then what happened? Then we went down. We took out all this pool of liquidity here, and then we have an instant rejection in price. Price reverses and went up, taking out all this liquidity also. And now for this month, we can't really say yet. We can't call this a rejection, so I would say we are still currently bullish on EU. We are still currently bullish on it. But one thing is, we can't actually call this a major break of structure. Why? Because we are still trading inside this range right here. We are still trading inside this range. So until we break this level here, we can't call this a major break of structure. Are you guys following me? So when you come into a new, peer or a new assets that you want to be trading, you need to get or like have the overview, yeah, the complete overview of what you are seeing in the market. Let me take out all these drawings. You need to have that overview of what you are seeing, so that because that will guide you into what you will be doing. You won't just jump into a market and just start trading anyhow. Just start trading anything you see. Are you following me, guys? So what we need to put into consideration, I'm going to mark this out so that whenever I come to the charts, I won't have to zoom, or whenever I'm at the monthly, I can always see this. So I'll mark this out as liquidity. And mind you, sorry, we are going to be using more of ICT concepts and very little support and resistance. Because ICT works much, much, much more on this pairs. So this liquidity taken out. What does ICT call this? Power of three. That's what it is called, the power of three. This here, this consolidation you guys are seeing here is called accumulation. This consolidation you guys are seeing is called accumulation. Then this move to the opposite direction is called manipulation. And then the instant rejection of is called distribution. And you'll be able to see this as, I don't know how many months, this February, March, April. Since from January, February, March, April, May, June, July. If I go to the 6 months candle, it's just going to be one bullish candle. Can you see? Can you see? We opened here, we went down and went up. So on the 6 months, it's just one bullish candle. Now we are forming the next candle for the 6 months. And let me show you another thing. Look at liquidity was taken out here. Liquidity was taken out here. Surely we took out this then instant rejection, and we came back and retested those levels, and then boom, the market went up. Are you guys following me? So even if we are to come back down, I don't want to start analyzing on the 6 months, but we already know that we have a bullish storyline from the 6 months. If I go one time frame lower, which is the 3 months, we clearly have a break of structure. This is where we are. We took out this liquidity, then we broke structure. Even though we are inside this trading range here, but we still broke structure. So if it retraces back down, we'll still expect to see price goes up. So let's keep that. Don't go as far as that. Let's go down to the weekly and let's see. So like I said, we are still bullish on EU. We are still very bullish on EU. So currently what we are going to be doing is we are going to be looking for entries. Where are we going to enter the market from? Where are we going to enter the market from? So I need to, sorry about that. We have this level on the weekly, and will I see this level? Yeah, let's also observe this level on the weekly also. We have these two levels. Price is almost close to the first one. So, and then going down to the daily, what do we see? I can refine this level down to this level so that we're going to, take out this low here. Then we also need to, I can refine this level. I can refine this to, I don't want to take it as far down there because EU is not very volatile. It's more like a stable pair. So if you over refine it, actually you might miss out on some moves. So let me just put this level down. You see there are a lot of levels on this. Even just on daily, we have a lot of levels. That's why you need to start from the higher time frame. You definitely need to start from the higher time frame. And what I like about it is it's actually, retrace where whenever it's trending, it actually gives us a fair share of retracements. That's why I like EU. We are currently in this range here. Can you see? So we are currently trading in this range here. So I use my feet very well on this pair. So if I draw from here to here, sorry, it's not very accurate. It's supposed to be this low. So if I draw from here to here, can you see that these two levels are the ones with higher probability because Y is below equilibrium? Let's come back to this eye here. Let me show you the same thing. If I adjust, we started there. Can you see? We went below equilibrium. This is the impulsive move. We retrace and then went back up. I can still find, little impulsive moves right here. Look at this. From here to here, that's below equilibrium. Came down to this other block right here and then we continue moving up. But on the higher time frame, all this is actually one impulsive move. But since we haven't really broken structure yet, let me take this out. We'll consider this bearish move a break of structure if we can break below here. We'll consider it a break of structure, but if we can't break this impulsive move, then we haven't really broken structure. So we'll take note of this level. If this level gets taken out, then we'll take note of these levels right here. Now, another thing to note, the EU doesn't really, respect our levels like that. So we have to take into consideration alchemist, ICT one more time. So we have a fair value gap right here. Why? So what I'm trying to say is that whenever we mark out our level, it should be in confluence with some, you know, ICT PDRAs. So what does PDRA means? PDRA are just, those things you look for. I don't know how I'm going to put it in, the most easiest terms. PDRA in ICT are just the ways they recognize their levels, or the way ICT traders recognize where price will come to. So there are lists of stocks. We have the order block, we have the rejection block, we have the mitigation block, we have the fair value gap, we have there are a lot of them. I've actually started forgetting them. So in this impulsive move, this is going to be our order block. This candle right here is going to be our order block. This candle right here is our order block because it's the last bullish candle before the impulsive move. So we'll reasonably want to see price come back down to this order block. And why is this order block a high probability? Is because we have this fair value gap right here. We have this fair value gap right here. Can you see? I mean, there's a color for liquidity. We have this fair value gap right there. And mind the fair value gap is just means inefficient price action. A point where price was, delivered one-sided without the other. Yeah, something like that. So we have a fair value gap here. We have an order block, and then we have to wait for price to come back down to this level. It might not come back today. Mind it might not come back today. It might be within the week, but we still have to wait. This is high probability. I won't advise us to sell to this level while we are in an extremely bullish market. So selling is very, very dangerous. The first week we started, we were not very, very, profitable. So which is why we need to go into the market with much more caution. I would have I would have suggest we scalps, but let me just give a quick review on that. So let's start by daily rejecting daily here. Going down to the 4 hour. Did the 4 hour broke structure? Did the 4 hour broke structure? Yeah, we broke structure here and we keep breaking structure ever since. So we'll go back to the daily. That's if we want to scalp, we'll go back to the daily and we'll mark our zones. And we have this level here. It's the only level I'm seeing on the daily time frame. We have this level here. This more like an order block, or I call it a breaker. I'm not sure. This more like an bearish order block. I'll mark this as daily. I'm not seeing any other levels. Then maybe this. I'm marking this. I'm marking this. Yeah. Wait. No, it should be this. Yeah. So I'm marking these two levels. So going down to the 4 hour, I'll just refine those two levels. What am I seeing? This level I'll refine it right here. Can you see it was used as support 1, 2 before it gets broken? So once price comes back down here, I'll be observing it, and then I have this open close right here on the 4 hour. Yeah, for this level, oh no, I'll just leave it there. And this other level, I'll refine it right here. So if you want to scalp on EU, like I said, we still have to wait. We have this relative equal lows right here, and those liquidity are definitely going to be taken out, like definitely. So we have to wait for price to come up here and see whether it respects this level or this level before we sell back down into this level. So that's too is going to take a whole lot of time, like a whole lot of time. So that's that on EU. So one more time, if you find this insightful and helpful to your trading career, don't forget to like and hit the subscribe button. So I'm going to come more with some other peers. Thank you guys.